What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I did a huge review on ZIM. As to why I'm buying, it was like 17 minutes or so. You can check that out. And despite the most recent news with ZIM, I'm still going to buy. And I'm going to explain to you my rationales. As I said before, there's always a risk when it comes to investing in high yield dividend stocks. Understanding the way they distribute their dividend and why they're in a demand company is why I'm still buying them. So I took a big risk back in the pandemic hit. I put a lot of money into EPR properties and I waited and waited and waited until they resumed their dividend because they suspended that. And it was beautiful because they were so down and I just started getting very nice dividends. This one is very important as well. And I'm doing this video right now because I'm going to have that saved for tomorrow. But the thing is, there's a lot of recent news. It's negative news. I'm not too concerned. I'm still going to buy it. So, this is something I probably... I'm very aggressive as a dividend investor. I like high yield, high dividend growth. Like I said, I'm focusing really on the financial sector and real estate sector with my money. This is play money for ZIM. Now, I sold them for a loss for tax purposes, and I rebought them, and I got some pretty nice dividends for these guys. But I'm still going to continue to buy them, and I'm going to explain to you my rationales. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this stock out right now. So ZIM is a very interesting stock. Now, the way they distribute their dividend, I went over in my previous video. But the thing is, these guys are taking a huge nosedive. The economy is doing terrible. The PE ratio is low, which is kind of a red flag. Dividend yield, we're going to go over the dividend. Average volume is 3.77 million. People are panic selling like crazy. And I'm actually buying tomorrow. The market cap is 1.76 billion US dollars. Its year range is 1450 to 7140. Day range is 1450 to 1606. And its previous close was 1751. Now let's go over the news. So I'm on the lodestar.com. ZIM dividend zero due to Q1 net loss of 58 million. Stock down 17% in early trade. ZIM integrated shipping will not pay a dividend to shareholders on the account of the net loss recorded on the first quarter of 2023. Now, as I said before in my previous video, even if I had 400 shares of these guys, I wouldn't feel comfortable. If I had 400 shares in like Simon Properties, Wiki Properties, let me give another example. Probably Regions Financial with my M1 Finance dividend portfolio. Even Arbor Realty Trust, I'd feel more comfortable. And Arbor Realty Trust has done phenomenal against the S&P in the past 5 years. Hiked its dividends. Revenue has done extremely well. And they have proved Ninja research wrong. So the company's dividend policy remains unchanged, distributing 30 to 50% of annual net income as a dividend to shareholders. Dividend payments will be made on a quarterly basis at a rate of 30% of the net quarterly income of the first 3 fiscal quarters of the year. So let's go over the numbers. So this is a really crazy time with ZIM and a lot of REITs, a lot of financial sector stocks. This is expected. Again, this is why I throw play money in and I kind of give the dartboard theory. You throw the dartboard here. Sometimes you get in the middle. Sometimes you get off to the side. Sometimes you're so bad with throwing the dart, you hit your buddy in the shoulder by accident. And this is one quarter where you hit your buddy in the shoulder. The reported revenues of 1.4 billion. Still, that's a lot of money. Net loss of 58 million. So the adjusted EBITDA of the 373 million and adjusted EBITDA loss of 40 million. So first, understand what the terminology of those two things are. So right here, here's their highlights. Net loss for the first quarter was 58 million compared to the net income of 1.711 million in the first quarter of 2022, or a diluted loss per share of 50 cents compared to the diluted earnings per share of 14.19 in the first quarter of 2022. So the EBITDA for the first quarter was 373 million, a year-over-year decrease of 85%. Operating loss, EBIT, for the first quarter was 14 million compared to the operating income of 2.243 million in the first quarter of 2022. Reconciliation items between operating income and adjusted EBIT in the first quarter was negligible. Revenues for the first quarter were 1.374 million, a year-over-year decrease of 63%. This is all the economies just worldwide. It's not good. Everybody's predicting a recession. This is kind of expected. Carried volume in the first quarter was 769,000 TEUs, a year-over-year decrease of 10%. So all this stuff is kind of ugly. Average freight per TEU in the first quarter was 1,390, a year-over-year decrease of 64%. Net leverage ratio of 0.1 times at the March of 2023 compared to the 0.0x as December 31st, 2022. Net debt of 381 million compared to the net cash of 279 million as of December 31st, 2022. So their response to the president and CEO, they have to provide their rationales. Following a record of adjusted EBITDA and EBIT generation, ZIM's first quarter results reflected significant decline in freight rates and weak demand, particularly in the Trans-Pacific trade. That was a big problem that began last year, while near-term outlook for container shipping remains challenging. I did bring this up. I'm pretty sure it was in a Twitter space about this, that this could be a problem. The proactive steps we took during the preceding highly lucrative market period of better position us now to meet these challenges, and we believe our differentiated strategy will ultimately deliver sustainable value for shareholders in the long term. I feel pretty confident after reading this. Just me, but I still threw some play money in to see what happens. Again, these guys are beautiful for me because they have their dividends. Like I said, it's a dartboard effect. Pretty much have bought me very good dividend growth stocks. That's the purpose of these guys. This is not I would not put this in a traditional and or Roth IRA. So Mr. Glickman added, with a focus of enhancing our commercial and operational resilience, we adapted our vessel sourcing strategy to improve our cost structure with addition of fuel efficient newborn tonnage that will overhaul our fleet portfolio as we advance our ESG goals. These include 10 15,000 TEU dual fuel LNG vessels, which are ideally suited for our core Asia and US East Coast service, and 36 smaller, more versatile vessels, 18 which are dual fuel LNG that will enable ZIM to operate a fleet best suited for trades and services. At the same time, our strong balance sheet and ample liquidity further make us confident the company will operate from a position of strength even amidst the market headwinds. So I'm going to go even further. Their total revenues are 1.37 billion for the first quarter of 2023 compared to the 3.17 billion for the first quarter of 2022. So that's one thing. The net loss for the first quarter in 2023 was 58 million compared to the net income of 1.71 million for the first quarter of 2022. So I looked over this. I really did this, and I'm not going to panic sell because people are panic selling like crazy. Because, like I said in this is beautiful play money. I do not feel confident with 400 shares of these guys. I'm not going to get $6 a dividend. It's going to be up and down, right and left. It's just fun play money to put in ZIM stock. And really, if you watch my previous video, that one's done very well. It's something that, again, do your due diligence. I provide my rationales. One of the big rationales is back in the Mediterranean, just thinking back to the Greeks and Romans and all this with trade. Trade was very important. And these guys are, very strategic when it comes to shipping. And that's one thing that really attracted me, because if you bring value to somebody, then, or are in demand. Some people have told me, oh yeah, I see these ZIM, crates all the time, out of state, and some with shipping. You have to give these guys some time. This is just me. Again, I'm not trying to be an influencer or a pumper of a stock. I'm just providing my rationales as to why I'm buying them and holding them, because, this could blow up in my face, but I have invested, like I said, with Arbor Realty Trust and EPR Properties that took a huge nosedive. I put money in Boeing expecting a dividend. I did sell them for a profit when pandemic was going on. But the thing is, this is not the most reliable dividend stock. When it's hot, it is hot. When it's not, it's not. Because I'll go over the dividend trends real quick. And I'm telling you, it's going to get ugly still. 2021, their dividends were $2, $2.50, $17, $2.85, $4.75, $2.95, and $6.40. Then they pretty much cut their dividend. This is going to be this is one of the most aggressive investments that I've made when it comes to dividend stocks. I'm not expecting, consistency, but there are some trends that look pretty good. And based on the revenues, and I do think these guys have been around for a while, for a long time, before they went public in the US market. These guys also have decent revenue. And I do think if they adapt and make some changes, which I expect, they should be fine. I mean, I would be happy if I got $2 a quarter versus like 17 or 640. But I mean, they've been around. Things are looking okay overall. This is one blunder that happened. This could be a blunder for a year, but I still feel fine buying these guys with some play money, $1,000 here or there. I have the money and resources to do that. Maybe get to 100 shares, see what happens. It's not, there's more stocks that are more volatile and have more issues with their dividend. But these guys are a shipping company, and they are in huge demand compared to, companies like Newell Brands, who have had issues because they only offer a few things. These guys are, I mean, what are you going to do if you don't get your stuff for shipping? So, I mean, like I said, if you watch my previous video, I really provided my rationales as to buying them. Now, stability wise, you're kind of better off buying a stock like Starbucks for consistent dividends. But this is why I'm buying these guys, is because of kind of like the dartboard effect. And I mean, I'm buying TSLY with play money. I have the money to throw around and see potentially if I can make 600 a month in those guys and start buying all these these options ETFs. So it's not something to like throw all your eggs in one basket. And I'm going to explain that like 1,000 times with this dividend stock, because this could blow up in my face. But I still feel fine just leaving these guys alone, having like an extremely small percent in my M1 Finance dividend portfolio with these guys, and seeing what happens. So I'm going to jump to their revenue before I conclude everything. The revenue-wise, annually in millions US dollars, so 2019, $3,299, 2020, $3,991, 2021, $10,728, and 2022, $12,561. So the one thing that does have me still buying these guys is their consistency, except one, quarter pretty much, or one incident that happened. It was like, so the revenue annually, this is what still has me interested in these guys for play money, throwing in there. 2019, This is annual money in millions US dollars. 3,299, 2020, 3,991, 2021, 10,728, and 2022, 12,561. So I'm going to conclude this before I jump to my disclaimer. I have play money that I throw around here and there. TSLY, I've thrown it in ZIM. I throw it in crowdfunding. I threw it in real estate crowdfunding. Actually, the rich uncle's bricks rate blew up in my face because of the pandemic. I've thrown money in Arbor Realty Trust. I threw it in EPR Properties, and it's done well. Maybe a boneheaded move, but I'm just going to tell you, I'm going to continue to buy, not like all the time, because I'm really focused on the financial sector stocks and real estate stocks right now. But I'm going to continue to throw some play money here and there and see what happens, maybe in a year or two, and then make a decision. Now, I did some really good tax loss harvesting, and I showed you how much I made in the past with ZIM. Actually, I'm pretty sure I made a profit in the long run because of their dividends. But the thing is, it's a big risk, and throw a little bit of play money in, see what happens. So I just wanted to conclude this. That I'm not selling, I'm not panic selling. I'm not doing this to do clickbait. I'm just providing my rationales. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I am going to jump to my disclaimer. As a reminder, this is a disclaimer notice. This is not financial advice for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing, and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video, and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.